In any way, has all of this activity on these secondary markets made your job as a venture capitalist more difficult or more complicated?
Yeah, it's made it somewhat more challenging because in the hottest sectors with companies that get the most visibility and are growing the fastest, the secondary market prices start looking like public market prices because the buyers of those securities are thinking about these like they would think about a public company. So you're paying a full public market price when you do that.
When you see these valuations like LinkedIn, $3 billion, Twitter worth $4 billion, Facebook worth $70 to $75 billion, are those valuations justified?
It's hard to know, right? I mean, they're market-based. So I don't know, if I look at Facebook as an example, and all these transactions we've heard about all the way along, do I believe that if the company were publicly traded, it might trade at that kind of valuation? Yes.
How difficult is it to get into these deals as a venture capitalist?
It's hard. It's hard, right? They're competitive. Now, instead of just competing with venture capitalists trying to invest in companies, you're competing with high net worth individuals, you're competing with hedge funds, other institutions that are all trying to, they see these secondary markets as a way to get into these companies that they couldn't get into before. So it makes it more challenging.